Hey everyone, welcome back to Corporate Decoder, the place where we take a hard look at the stuff nobody else wants to touch and find the juicy bits. So buckle up because NuScale Power Corporation's latest report might just have a few surprises we need to unpack. Today we're diving deep into NuScale's second quarter 2025 results, and let's just say things are getting interesting as they try to power up their business. We'll be looking at their financial health, what's driving their revenue or lack thereof, and some of the not-so-small challenges they're facing. If you like seeing what's really going on behind the corporate curtain, make sure you're subscribed and join our Discord community, linked in the description. Let's start with where they stand as of June 30, 2025. NuScale Power Corporation is showing total assets of $606,452,000. That's a pretty significant number, but it's how those assets are made up and what the company owes that really tell the story. They have total liabilities of $107,590,000, leaving them with a total stockholders' equity of $498,800 and a big $62,000. Now let's look at how they're actually making money, or in this case, losing it. For the 3 months ended June 30, 2025, their revenue was $8,054,000. That sounds okay, but then we see cost of sales at $6,273,000. That's not okay. But then we see cost of sales at $6,270, $302,881. That's not a lot to cover all their other costs like research and development, which was $11,000 at June $1,000. That's not a lot to cover all their other costs like research and development, which was $11,000 to cover all their other costs like research and development, which was $11,802,000 for loss from operations balloon $55 the other costs like research and development, which was $11,882,000 for just 3 months. This all translates to a tough situation for shareholders. For the 3 months ended June 30, 2025, the basic and diluted loss per share of Class A. Common stock was a negative 0.1 third. They lost 13 cents. And looking at the 6-month period, the loss per share was 0.244, and this kind of performance makes it tough to cheer about. It's also important to note where their money is coming from and going to, especially with related parties. For example, their accounts and other receivables includes $2,676,000 from a related party as of June 30, 2025. This highlights how interconnected their business is, and we need to keep an eye on these related party dealings. When we look at their assets, we see $64,338,000 in long lead material work in process as of June 30, 2025. This signifies a significant investment in future production, like parts for their nuclear modules. However, it also means a lot of money is tied up in inventory that isn't yet generating revenue. The company is also spending a good chunk on its employees. For the 3 months ended June 30, 2025, equity-based compensation expense was $5,239,000. That's a substantial amount paid out in stock and options, which is common in tech and growth companies, but it definitely impacts the bottom line, contributing to those overall losses. Now let's talk about the ownership structure as of June 30, 2025. NuScale Corp Class A common stock made up about 47.0% of the company's ownership. The remaining 53% is attributed to NuScale LLC Class B units, which represent non-controlling interest. This split shows that while NuScale Corp is the parent, a significant portion of the economic benefit is held by others. A common situation after complex transactions like mergers or SP deals. Looking at the revenue breakdown, the majority of their income comes from power plant and NPM related services, bringing in $714,385,000 in the quarter ending June 30, 2025. Energy exploration centers contributed $551,000 with a small amount from other. The heavy reliance on one segment suggests a focused but potentially vulnerable business model. Looking ahead, their commitments are quite substantial. They have materials purchase commitments for long lead materials totaling $99,514,000, which comes due over the next few years. This shows they are investing heavily in future production, but it also means they have significant obligations on their plate. It's not just the financials that are under the microscope, there are also legal matters to consider. They face multiple shareholder lawsuits which alleged misleading statements. However, the good news for them here is that by July 2025, after the company filed a motion to dismiss, the court dismissed the consolidated case with prejudice, meaning it's over for good. A key risk factor they're highlighting is the limited number of authorized shares of Class A common stock remaining. They currently have about 21 million shares left, and since they've been relying on selling shares to raise money, this could become a big problem if they can't get shareholder approval to increase that number. It's a classic catch-22. They need money to grow, but they're running out of the shares they can sell to get that money. The Sarbanes-Oxley Act certifications, like this one from the CEO, are standard but important. They basically mean the top executives are vouching for the accuracy of the financial reports. However, and this is a big however, the report also points out a material weakness in their internal controls. This means there's a reasonable chance that a number in their financial statements could be wrong and they might not catch it in time. They're planning to fix this by hiring more people, bringing in outside experts and improving their IT controls, but it's going to be costly and take time. Okay, so let's put on our Warren Buffett hat and look at NuScale. Their strategy seems to be all about betting big on the future of nuclear power with their small modular reactors. The good news is they've made progress with regulatory approvals, which is a huge hurdle cleared. They've also secured key partnerships that are essential for their business model. However, the financial picture is still pretty grim. They're burning through cash at a rapid pace, with substantial losses from operations and a negative bottom line. Their revenue is growing, which is a positive sign, but it's not nearly enough to cover their expenses, especially those high research and development and administrative costs. The reliance on equity financing, specifically through their ATM program, like selling shares for 99 Dura, the financial picture is still pretty grim. They're burning through cash at a rapid pace with substantial losses from operations and a negative bottom line. Their revenue is growing, which is a positive sign, but it's not nearly enough to cover their expenses, especially those high research and development and administrative costs. The reliance on equity financing, specifically through their ATM. In conclusion, NuScale Power Corporation is in a very high-risk, high-reward situation. They are pushing a cutting-edge technology that could be huge if it catches on, but they are burning through cash and still need to prove full commercial viability. The path forward will require securing more customer orders, managing their expenses very carefully, and successfully navigating the complexities of increasing their authorized share capital to ensure they have the funds to operate. It's a tough climb, and investors will be watching very closely. What do you think about NuScale's future prospects? Let me know your thoughts in the comments below. If you found this breakdown helpful, give this video a thumbs up and subscribe to Corporate Decoder for more in-depth analysis. And don't forget to join our Discord community linked right in the description for even more insights and discussions. Thanks for watching, and I'll see you in the next deep dive.